Stop everything you're doing and look at the clock. It is 9 a.m. on Friday, December 19th, 2025. While you were drinking your coffee, the financial world as you know it was set on fire. Behind the closed, soundproof doors of the COMEX boardroom, a group of men who control the wealth of nations are currently deciding if you are allowed to be rich, or if they are going to steal your future to save their own skins. This is not a drill. This is not a market correction. This is an emergency board meeting convened for one reason. The banks are drowning, and they are begging for a total ban on silver purchases before the closing bell today. They are calling it a market stabilization measure, but let's use the real language of the streets. This is a desperate, pathetic plea for a liquidation only order. They want to turn off the buy button. They want to repeat the crime committed against the Hunt brothers in 1980 and the retail traders in 2021. They are trapped in a $15 billion suicide pact, and their only way out is to stop you from participating in the greatest wealth transfer in human history. Why today? Why this morning? Because the math has finally caught up to the lie. As of this very second, the silver market is staring into a physical abyss 61 million ounces deep. That is the record-high delivery requirement for the December contract. 61 million ounces of physical metal that the short sellers, the massive bullion banks, simply do not have. They sold what they didn't own. They gambled with metal they never touched. And now the bill has come due. The paper tiger is being torn apart by a physical reality. Look at the carnage in the vaults. Registered inventories at the COMEX have just cratered to 130 million ounces. That sounds like a safe number until you realize that over 1 million ounces walked out the door in a single 24-hour period yesterday. The drain isn't just a leak, it's a hemorrhage. But the real headline, the one they are trying to scrub from the internet as we speak, is the confirmed leak from the JPM Vault. Our contacts are reporting a massive, unannounced outflow of 987,000 ounces moving from the eligible category into registered and then immediately disappearing into private hands. This isn't a trade. This is a bank run in slow motion. It is the sound of the elites heading for the lifeboats while they tell you to stay on the sinking ship. The banks are currently sitting on a $15 billion loss in uncovered short positions. Let that number sink in. $15 billion of exposure that is naked. They sold silver at $25, $30, and $40, thinking they could always smash the price back down with paper contracts. But the smash has failed. Today is the Friday slide, the day the banks traditionally dump millions of ounces of paper silver to trigger stop losses and scare the weak hands. But this morning, something different happened. The buyers didn't blink. Every paper bar they threw at the market was caught by a physical buyer. The shorts are now being squeezed against the wall, and the wall is made of 61 million ounces of missing silver. We are witnessing the Unobtanium phase. If the COMEX board grants this emergency plea and bans silver purchases, the price you see on the screen becomes a ghost. It becomes a relic of a dead system. What we are looking at is a total decoupling. If you can't buy silver at the official price, then the official price is a lie. This desperate plea to stop purchases is the ultimate admission of insolvency. If they had the metal, they would welcome the buyers. They are begging for a ban because they are empty. The cupboards are bare. And the timing couldn't be more catastrophic for the West. We are less than 2 weeks away from January 1st, 2026. On that day, China's strategic export ban on high-purity silver and critical metals goes into full effect. For the last year, China has been the silent vacuum of the silver world. While Western investors were distracted by AI stocks and crypto, the People's Bank of China and the Shanghai Gold Exchange were quietly stripping the Western vaults of every bar they could find. They've been using the new BRICS Pay system to settle trades in gold and silver, bypassing the US dollar entirely. They have built a wall of silver, and on January 1st, they are slamming the gate shut. Think about the solar industry. In 2025, we saw a global explosion in TOPCon solar cell production. These cells require significantly more silver than older models. In August of this year, a major solar assembly plant in Vietnam had to shut down for 2 weeks. The reason? They couldn't source 5,000 ounces of high-purity silver paste. They offered 25% over the spot price and were told zero inventory. That was the canary in the coal mine. If a multi-billion-dollar tech giant can't find 5,000 ounces, what makes you think the COMEX can find 61 million? The $15 billion loss the banks are facing is a systemic threat. If silver gaps up to $80, which it is mathematically primed to do if the shorts are forced to cover, those losses won't just hit the banks, they will hit the clearinghouses. We are talking about a cascading crash where one bank's failure triggers the next. It's a domino effect that could liquidate the entire futures market. This is why the 9 a.m. meeting is so frantic. They aren't trying to save the market. They are trying to prevent a total meltdown of the Western financial architecture. Let's talk about the unusual facts that have been suppressed this year. Did you know that in March 2025, 3 of the largest silver mines in Mexico faced spontaneous labor strikes that lasted for 60 days? These strikes removed nearly 15 million ounces from the global supply chain. Or consider the fact that India's silver imports in the first half of 2025 exceeded their entire 2024 total. The Global South is waking up to the reality that the dollar is a debt-based illusion, and they are trading that illusion for the only money that has never failed in 5,000 years. As we sit here on December 19th, the Friday slide has become a Friday vertical. The banks are begging the COMEX to protect their short positions, because if they don't, the price will hit $80 before the markets open on Monday. They are trying to freeze the game because they know they've lost. They are like a gambler who has lost everything and is now trying to blow up the casino so they don't have to pay their debts. The legal term you need to be prepared for is force majeure. It's the get-out-of-jail-free card for the exchanges. If the COMEX declares force majeure, they are admitting they cannot fulfill their contracts. They will settle your silver contracts in cash at a price they determine, likely the price from 2 days ago. You will get your paper dollars back, but you will lose the metal, and those dollars will buy far less silver on the black market than they would have yesterday. This is why the JPM Vault Leak is the smoking gun. The elites are pulling their physical metal out before the force majeure is declared. They are leaving you with the paper while they take the bars. We have reached the event horizon. The 130 million ounces in the COMEX registered category is the last line of defense. If that number drops below 100 million, the panic will become uncontrollable. Industrial users like Tesla, Apple, and Samsung will bypass the exchanges entirely and start buying mining companies just to secure their supply. We are already seeing rumors that Samsung is in talks to direct finance silver mines in Australia. This is the ultimate sign of a broken market. When the users of a commodity stop buying from the exchange and start buying the mines, the exchange is dead. Don't be fooled by the official ticker. The screen is lying to you. The real price of silver is the price at which you can actually take delivery. Right now, premiums on physical bars are exploding. If spot is $40 and you can't find a bar for less than $65, the price is $65. The $15 billion loss in paper positions is an attempt to keep the ghost price low. But the physical demand is a tidal wave that no amount of paper can stop. The 9 a.m. meeting is the final gasp of a dying regime. The banks are desperate. They are cornered, and a cornered animal is at its most dangerous. They will try to label you a hoarder. They will try to call silver stacking economic terrorism. They will try to tax your gains at 90%. They will do anything to keep you from escaping the dollar trap. But they cannot manufacture silver out of thin air. They can't print it. They can't stimulus it into existence. This is the liquidity nightmare we warned you about. The supply chain has snapped. The refineries are halted. The wholesalers are canceling trades. And now, the COMEX is considering a total purchase ban. If you have physical silver in your possession right now, you aren't just an investor. You are your own central bank. You are the only one who is safe in a world of $15 billion uncovered losses and ghost prices. The roadmap to $80 is now locked in. Stage 1. The Friday vertical as shorts try to cover before the weekend. Stage 2. The Monday gap up as the news of the COMEX purchase ban rumors hits the mainstream. Stage 3. The industrial capitulation as tech giants realize the China export ban is real and start panic buying every ounce left in the West. We are living through history. December 19, 2025 is the day the paper silver market finally broke. It is the day the banks begged for mercy and were met with the cold, hard reality of a physical deficit. The Unobtanium era has begun. The window is being bricked over. If you haven't secured your position, look at the clock. The 9 a.m. meeting is ending. The decisions made in that room will ripple through your bank account for the next decade. Do not let the volatility shake you. Do not let the emergency regulations scare you. The banks have lost. The industry is panicking. And the metal is moving to its true value. Hold the line, protect your stack, and watch the registered numbers fall to zero. The greatest wealth transfer in human history is happening right now. And for the first time in a century, the banks aren't the ones winning. Subscribe to this channel to stay ahead of the COMEX collapse and the $80 price explosion. We are monitoring the vault drains and the board meetings in real time. Leave a comment below. Did you try to buy physical silver this morning? What are the premiums at your local dealer? Is the buy button still working for you, or has the ban already begun? Let's get the truth out there before they turn the lights off. Stay vigilant. Stay physical.